Good morning this Wednesday, the 7th of February. I'm Grady Wolf, market analyst with Bell Direct. Wall Street recovered some ground in afternoon trade on Tuesday to close the day mixed across the key indices as investors assessed the latest slew of corporate earnings results and tried to gain further insight into the rate outlook out of the Fed. The Dow Jones rose 0.1%, the S&P 500 fell 0.2%, and the tech-heavy Nasdaq ended the day up 0.07%. Technology stocks continue to outperform this reporting season in the US, with Palantir Technologies soaring 19% on Tuesday after posting a revenue beat for Q4, while music streaming platform Spotify rose 6% after also topping expectations and posting an increase in premium subscribers. In Europe overnight, markets rebounded to close higher across the board on Tuesday as a rally for oil and gas stocks led to a positive close across the markets in the region. The Stoxx 600 added 0.7% on Tuesday, and Germany's DAX added 0.76%, the French CAC rose 0.65%, and in the UK the FTSE 100 jumped 0.9%. The local market extended losses into Tuesday's session though, as the tech sector, which wears the full brunt of high interest rate environment, plunged 1.8% after the RBA did not rule out further monetary policy tightening should inflation remain high. The RBA held the nation's cash rate at 4.35% for the month ahead at the latest meeting yesterday, as was largely expected, but investors were more focused on the commentary and outlook out of the RBA to gauge an idea of when rate cuts might be on the horizon. Inflation hitting 4.1% in the December quarter is a good signal that it is easing faster than expected. However, it is still too early to assume inflation is under control. The RBA also outlined that higher interest rates are working to establish a more sustainable balance between aggregate supply and demand, and that the labour market in Australia, despite showing signs of easing, still remains pretty tight. Until the RBA sees a trend in inflation drivers coming under control over a material period, the likelihood is that the nation's cash rate will remain on hold at 4.35%. RBA Governor Michelle Bullock also said she expects the nation's inflation rate to fall to the target range of 2 to 3% by 2025. Against all odds of declining Aussie retail spend, high interest rates and high input costs, the retailers continue to surprise with resilience as investors piled into Nick Scali and Myer on Tuesday. Nick Scali reported NPAT above the guided range for the first half of FY24, despite revenue falling in the high interest rate environment and high cost of living environment. Myer, on the other hand, reported growth across most metrics and expects a strong NPAT for the first half, between $49 and $53 million. And for the second time in 2 weeks, an Aussie-listed gold miner has fallen out of favour with investors for announcing reduced production guidance against rising all-in sustaining costs, with West African Resources falling 11% yesterday after releasing that trading update. Markets across Asia closed mixed on Tuesday, with China's CSI index adding 3.5% amid further stimulus measures to prop up the market in the region and enhance economic recovery in the region. Hong Kong's Hang Seng rose 4% on Tuesday, while Japan's Nikkei fell 0.5%. On the commodities front this morning, oil is trading 0.6% higher at $73.23 a barrel. Gold is up 0.55% at $2,035 an ounce. Uranium has fallen 5.66% to trade at $100 a pound, and iron ore is flat at $130.5 a ton. One Aussie dollar is buying 65 US cents, 96.46 Japanese yen, 51.8 British pence, and 1 New Zealand dollar and 7 cents. Ahead of the local trading session here in Australia, the SPI futures are expecting the ASX to open the midweek session quite high, up 0.73%. And now let's dive into some trading ideas for your consideration today. Bell Potter has maintained a buy rating on fashion jewellery company Lavisa and raised a 12-month price target on the company from $25 per share to $26.50 per share amid the growth opportunity in China, representing the largest incremental market identified in the company's global store rollout strategy. Since opening the first store in China in December, the Chinese fashion jewellery market alone is estimated at a value of $13 billion or 25 times that of Australia, which makes the market very highly attractive and a strong growth opportunity for Lovisa. And Trading Central has identified a bullish signal on Eagers Automotive following the formation of a pattern over a period of 148 days, which is roughly the same amount of time the share price may rise from the close of $14.50 to the range of $17.20 to $17.80, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful Wednesday, and as always, happy investing.